Hey guys and girls, Nathan here from the B.Invested headquarters. Today just reaching out to talk a little bit about why I buy properties at the type of properties that I buy. So as an investor, when I first started investing, I thought, house is the best thing, right? Units don't go up in value, cheap properties don't go up in value, properties in other states don't go up in value. I had all these opinions, and what I realized over the years is that all different properties go up for all different reasons, and opportunity cost was probably my biggest teacher in life, because I realized that I should have pulled triggers on deals back in the early days, but it's enabled me to develop the right strategies to get to where I wanted to be. As I always say, having a property is just like a vehicle. It's to get you from A to B. It's a part of your journey. And I use the word property and I don't use the word house because property is the commodity that I'm dealing with. What I get questioned a lot of the time, I've been questioned over the years about it, and sometimes I'll be cocky and I'll be like, I've got 200 properties, right? It's like, well, I know my shit, that's why I deal with what I deal with, right? There's lots of restaurateurs out there that sell $20 hamburgers and go bankrupt, right? But then we've got Maccas that sell a burger for $1 and they're a very profitable business, right? And it's having the right strategy and the right business model that's surrounding that. As an investor, I look at what is the strategy and what do I need to have as a parameter in my investment business as my portfolio is concerned to help me get to where I want to be. And for me, I realized that I need to get, in the early days, is that pull that equity out, go again. I want to buy things that are below market value. So if I'm buying a 200 grand property, that's 50 grand below market value. If I'm buying a 500 grand property, it's 50 grand below market value. The 50 grand on the 200 grand properties, 20% below market value, whereas, or 25% below market value, whereas the 500,000 and 50 grand is only, 10% below market value. So these numbers that are compounded greater over the time, have a much larger sort of amplified, result that comes from that. So my point of where I'm trying to get at here is, as we can see at the article that's on the screen now, from RP data that's just come out, or CoreLogic, is basically looking at the properties that are available across this country that are under $400,000. What we've realized is that there is enough pent-up demand at the bottom end of the market to ensure that properties aren't below $400,000. So everyone, well, not, when I say everyone, it's a broad range, but there's a lot more people that can budget to buy a property that's $200,000, $300,000, $400,000, compared to people that can budget $1 million in the market. So when we see times like we're seeing at the moment with volatility, the market's getting hit from a protection point of view, there's a reason why I had a simple strategy that was nothing sexy and nothing flash, right? I've always said my property investing is not sexy, it's not flash, but it's very fundamental on numbers, because numbers don't lie. And as we can see from the reports coming through CoreLogic, I built my portfolio and I retired in the middle of the GFC. We're here in the GFD with a much bigger monetary problem and financial mess that we're going into or coming out of than what we were dealing with in 2007, 2008. So I'm very well prepared for this market cycle. The question I ask is, are you prepared for that? And have you got the right strategy? Because the properties that are coming into the marketplace under 400,000, as we can see from the article from CoreLogic, there's not any more suburbs. Prices are falling nationally, but there's no more new suburbs that are coming in with properties under $400,000, and that's because there's a lot of people at that level that can push up those prices, and that's why I think the cheaper type of properties, the more affordable, the blue collar area properties. I've got properties from all different ends. I've got properties that are worth millions, multiple millions, $2 million, $3 million, $5 million properties. That's fine, but I've also got properties that are worth 100,000 or 200,000, and there's still a lot of fat and movement in those areas, because the fact is that they're very affordable. Most people can afford one, and there's always going to be a demand for those type of properties. Whereas your $2 million property, there's in a time like we're seeing at the moment, a lot more volatility in the marketplace, and a lot more impact can happen on a negative front. So how much higher can a $2 million property go? Will it double overnight and go from 2 million to 4 million? Or would a $200,000 property be more easily attainable to go from 200 grand to 400 grand? Because there's still people that can afford that. This is why it's important to have the right strategy, the right plan, the right information, the right knowledge, and formulate your own plan. Have your own ideals, have your own goals, your own knowledge, that you can make an educated decision. Everyone's looking for a financial advisor. I tell everyone, go be your own financial advisor, and that comes from education and knowledge. So yeah, just thought I'd share that with you. If you have got any questions, do you need some help? Do you need to keep growing? Do you need some more mindset around it? Do you need some help, whether it be financing or discussing your position or trying to pull out more cash flow from your rental property? Feel free to hit me up, speak to myself, speak to my team. Happy to help out where we can. We'll catch up soon. Have a great day. Bye for now.